From the Sunshine State, this is Tampa Bay's Tan Talk.
It's time for FLALAW, brought to you by the personal injury attorneys of Bryant, Caulfield, Averill, and Noyes. This hour will be informative, along with taking your questions and comments. Now, here are your hosts for today's show.
That's right. This FLALAW live on the radio. Thank you for joining us once again. I have the pleasure of being here as your host today. My name is Jacqlyn Bryant. For those who may not know me, it's been about a month since I've been on the show, but hopefully you're a faithful listener and you know who I am. I'm one of the partners and personal injury attorneys at Bryant, Caulfield, Averill, and Noyes. And as you know, we host this live legal call-in talk show every single Tuesday at 5 p.m. And we come to you with various legal topics and also legal professionals and attorneys throughout the Tampa Bay area who come in and talk to you about all different topics pertaining to the law that we believe is helpful to our community and can give you some information about legal matters that you might be dealing with. And so if this is something that interests you or someone you know, keep listening, share, let others know that we are live on the air. Of course, we are here right now in the WTAN studios, but we're also streaming live on various platforms. So if you have YouTube or Facebook, feel free to share that stream. You can find us right now at Bryant, Caulfield, Averill, and Noyes Injury Lawyers. So if you type that into YouTube or Facebook, you'll find us. You'll see that there's a red circle around the logo that lets you know that it is live right now. And you'll see me and my guest, who I'll introduce in just a moment. You'll see us in the studio. So if that's what you see, then you're in the right place. That also allows you to click and comment below. So if you have any questions or comments, or you just want to chime in to the conversation that we have tonight, feel free to do that. You can comment right there on YouTube or Facebook, and we'll read those out live over the air so that myself and my guests can see those comments and allow you to have your questions or discussion heard over the air so we can address whatever issues might be coming up for you or try to point you in the right direction if it's not something that we're talking about tonight. With that being said, we also have a podcast. So if you would like to pick up and listen to the show again later, because I can guarantee you're going to get a lot of good information, a lot of good end of year tax information is going to come out of this conversation tonight. And you're going to likely say, let me go back and listen to that again so I can figure out what I need to do to make sure I'm prepared for tax season next year. So we have you covered. You can go back and listen to us on the podcast, and tonight's show will be there on just about every place that you can consume a podcast. Spotify, iHeartRadio, most Apple podcasts, they're all there under FLALAW on the radio. So if you search FLALAW on the radio on your podcast platform, you should be able to find the show, follow us, and that way you'll see every time there's a new episode, and you'll be able to go back and find tonight's episode when it's uploaded, and you can listen to the whole thing in full. So with that being said, I want to reintroduce to you my wonderful guest for this evening. She has become our tax attorney expert at this point because she has given us such great information in regards to tax law. She is also a CPA, an owner of her own law firm here locally, and she's just been a great resource for our listeners. And so she and I both thought that this was obviously a great time of year as we're getting ready to close out the end of the calendar year. We're in what basically is quarter four or Q4. And there's a lot of things that people are doing in this season that will get them kind of prepared for the next tax filing. And so why not, as we're in the whole thick of that, have our resident tax attorney come back and talk to you all. So with that being said, I'm going to turn it over to my special guest tonight, Alena Miles, who can say hello and reintroduce herself to our listeners and maybe the ones that are just hearing you for the first time tonight.
Yes, thank you, Jacqlyn. Yes, my name is Alena Miles. I'm a tax attorney. Also, I have CPA credential. I do own my own law practice, Attorney Legal PA. It is located in Safety Harbor, Florida. And I recently opened a few by appointment only locations in Lakewood Ranch, proudly serving Sarasota, Bradenton, and Longboat Key areas. Miami, serving Miami area, and Key West,
All very vacation-worthy locations. I'm thinking Longboat Key, Miami, Key West. Those are all great.
Exactly.
Yes.
And and the type of tax work that I do is federal tax matters, anything IRS related. When people get penalty notices or they owe a lot of money to the IRS, they do not know what to do, they come to me. International tax is complex in its own, and it's closer to home than people think. I'll touch base on that a little later, but that's pretty hot, international tax. And Florida Department of Revenue sales tax audit. So Florida has sales tax, and issues with Florida sales tax is what I help people with. Mm-hmm.
Perfect. So one thing I have never asked you on the air, and you've been on here several times now, and I feel like I should have brought this up before because if you can't tell, she does have an accent. And I had a listener ask me, where is Miss Miles from? And I said, I don't know.
Yeah, that's a great question. Yeah, I'm from Belarus originally. Do you know where that is, Jacqlyn?
If I had to guess, I would have probably said Russia.
Yeah, that's very close. Okay. I'm Belarus is a neighbor of Russia, neighbor of Ukraine.
Okay.
And Lithuania. Mm-hmm.
So I wasn't too far off.
No, you were not. And actually, in those countries, we share that one language. We all have our own languages, like Belarus has Belarusian language, but a lot of people speak Russian language.
Gotcha.
Even though I'm Belarusian. Mm-hmm.
Right. So I know we were having a little bit of a discussion off the air regarding this region and how it ties into what you do right now.
Yeah, so I do have clients from Belarus, Ukraine, and Russia come to me, and some of them come to me for international tax matters, but some of them come to me for bankruptcy filings. Yeah. That's pretty, a lot of them are struggling through those immigration statuses being expiring, like you for Ukrainian stuff. And so a lot of them just need guidance, Russian-speaking attorneys' guidance on what to do in those difficult, complex, difficult times.
Right. I would imagine there's a lot of different things swirling around that topic, and especially those that are dealing with that. So That's great that you can be a resource, and you, of course, speak the native language, so that's always helpful.
That is, and they feel comfortable talking to me because of the language. There's no language barrier. Mm-hmm.
Exactly. Okay, well, great. So I kind of touched on it. This is kind of a great time of year. It can become a busy time of year. It can become an expensive time of year, stressful time of year. Just depends on your perspective, right?
Right.
Some would say it's the most wonderful time of the year. But do you tend to see any type of uptick when we're in December, heading into the holidays, approaching the end of the calendar year, of tax questions or like any financial panic around the holidays?
So right now during this time, a lot of people who are proactive come to me for tax planning.
Okay.
So the procrastinators, they're
not thinking about
they're
you
not
right now.
thinking about taxes right now.
Yeah.
They think that January is going to be a better month. So now it's more tax planning opportunities out there. And that's the best way to approach taxes in general, is be proactive.
Right. Okay. Now, I know we see it often. I think it's a lovely thing. And then somehow it sometimes gets painted in a negative light. But I always see it as a wonderful thing. You see a lot of charitable giving and gifts and donations and things, especially today is what is it called? Charity Tuesday, or
Yeah.
What's the phrase? I forget what it is. It's like Giving Tuesday, right? Giving Tuesday. It was Cyber Monday. Today's Giving Tuesday. So everybody's giving this time of year, but then people are like, oh, well, it's just a tax write-off for them. They're not really doing it for, the benevolence of their heart. They're just trying to get a tax write-off. What are your thoughts on that? Is this a good time of year to be giving charitably? And if so, why do people do that?
So that is a very good question, Jacqlyn, because that's where tax planning comes handy. Mm-hmm. For example, if you're going to give away some money in 2025, there is no new AGI limitation applicable just yet for 2025. That limitation comes into play, there comes 2026. Mm-hmm. So in other words, it could be better for you to donate in 2025 versus 2026, because in 2026 you're not going to take full deduction for your charitable donation. Mm-hmm. So those things, you brought up an excellent question, because that's very handy, 2025 versus 2026 planning, and which year do I donate to take the most of my deduction. Mm-hmm.
Got it. So when people are coming to you, usually this time of year, those are the kinds of things that they're trying to figure out.
Exactly, because the books are not closed yet. Books close December 31, 2025. Mm-hmm. There is nothing you can do post December 31, 2025 to fix 2025. Right. But right now, still being in early December, you have at least a month right now. Not ideal. You should have come to me in October. But you still have a month to do something.
Right, of course. For all the procrastinators out there. So we're going to obviously get into the different things that people can do, and tax, business owners versus individuals, and those sorts of things if time permits. But first, let's kind of start with the basics and the kind of practical steps. We're in the last quarter here, and obviously they should have started in October, like you said, but let's say they're starting now. What are some Q4 tips as far as organizing their tax documents and getting that in order? What would you recommend there?
So basically, you do want to be organized and keep all the receipts to support your tax deductions. And what happens is, if you do get audited, right, you don't get audited tomorrow, right? It's like once the year closes, once you file your tax returns, you don't get audited immediately. So let's say 2-3 years from now, you're going to get audited. If you will get audited, you don't have any evidence to support your deductions. Guess what's going to happen? You're going to struggle through your receipts at that moment, and you're probably going to lose your tax deduction. And if you do, the IRS will assess penalties and interest. So you're going to owe money just because you're not organized.
Right,
so the better way, of course, is to keep yourself organized. Keep a folder, for example. Once you pay such and such bill, keep that receipt in that folder, and then let's say zip that folder at the end of the year once the year closes, and keep it like in some kind of permanent file or whatnot to substantiate all your deductions. You can do it throughout the year, so it's not overwhelming right now at the end of the year.
Right. And so for people that are doing, big holiday charitable donations and giving, that's something where they should be keeping the receipts for everything that they're giving. If they're buying a large amount of toys, is like, how would that work? They just keep the receipts and stuff?
They keep the receipts, and typically what happens is, let's say you donate to the church will issue some kind of supporting receipt saying that, thank you, Mrs. Jacqlyn, you donated $500 on such and such date. And you keep that as your supporting evidence to substantiate your $500 charitable deduction to that specific church.
Now, if you're never audited, do those forms, receipts, and proof really matter?
So, nobody knows whether you're going to get audited or not. So it's not like you know whether you're going to get audited or you're not going to get audited. But my point is
you've got to have the proof if you do.
You've got to have if you, but also they're not going to audit you immediately. So many years are going to pass by, and guess what? Like so many years from now, you're not going to remember how your 2025 receipt for such and such, where is that receipt? So
you've got to be very organized, right?
Yeah.
That's so funny that you mentioned that, because I have these like accordions where I keep, my important papers in it. But it's not as organized from, the years as I would like it to be. So, 2020 23 might be here, 25 might be, and it's not in chronological order. And I noticed that the other day, and I'm like, oh my gosh, if I ever have to file documents, I'm going to be going through every single thing because I don't have it in a good order. So that does scare me a little bit when you think about you've got to be very organized, and you want to keep your proof, and you want to make sure you have it, because if it happens, like you said, years later, you're not necessarily thinking about it.
Exactly. And let's say you do hire me for certain services. One of the things I can do is I will build the file, like kind of, it's not like audit proof file, because like you're not hiring me in case there is going to be an audit, because you don't know if you're going to get audited. But I'm going to basically keep a copy of your receipts to substantiate, make sure that everything is substantiated. And if we were to need it so many years from now,
you would already
also
have
me to have
Absolutely.
that.
Good. That's very good advice. So is it something that you would recommend as far as, let's say, keeping things digitally and saving it to a computer or a jump drive or USB or something, as opposed to being like me and keeping all the papers in an accordion?
Yeah, I think that if you came to me with that accordion and paid me my billable rate to scan all that for you, I don't think it would be a good investment.
Right.
But it's up to you. But no, definitely right now with the technology capabilities being as such as they are, you just want to make sure you choose the right way for yourself, where it's protected, like, there is no data breach, nothing like that. And, just keep it safe digitally somewhere through the trusted channels.
So when people come to you and they're starting that planning process this time of year, do you find that you are able to locate like unexpected deductions for people?
Yeah, definitely. Some people, one of the services that I offer is 3 years look back. Typically, it's 3 years back. I can look back more than 3 years, but 3 years look back to see if something jumps at me. And some of the things that I see are unbelievable. For instance, international forms. Some of them are informational forms. In other words, you don't. If you have a business offshore but don't have income, right? You still have to disclose it. So it's informational, but penalties if you don't report those informational forms are draconian. Okay, and the statute of limitations doesn't start ticking. In other words, they can go back and audit your tax return if you didn't file such and such international tax form. Okay, so I see those being missed. Yeah, definitely. There are things that I see, but my review is still limited, because typically when people come to me, they don't come to me with like a cardigan box.
Yes.
I don't have access to the work papers. It's more like I look at the tax returns, I ask questions, and see what the red flags are and what they could have missed.
Gotcha. So then when we're trying to prevent surprises, let's go ahead and talk about why the filing status is important. Because I know people should really double check that before the year ends, right?
Yeah, so that's one of the first things to double check on, because like depending on filing status, all your let's say standard deduction or whatever limitations, they are kind of tied to that filing status. So it's choosing the wrong status. For example, if you're married filing separate, but you can choose head of household, well, now let's say you mistakenly chose married filing separately. Now you lost a bunch of deductions because married filing separate is not a tax beneficial status. But you have to go through analysis and figure out whether you do qualify. For example, in my example, head of household, so it's not for granted. But if you do and you inadvertently miss that, that's a huge loss for you.
So depending on how you file could have a very big tax implications
definitely.
At the end of the year.
And that comes handy specifically for people who are in divorce, people who are separated. Those become sensitive in those cases specifically.
Right. Because I was just thinking, why would you file separate? But I guess obviously there are people that are married who aren't technically together.
Yeah. There is. If we're talking married filing joint versus married filing separate, there is a reason to file separate.
Let's talk about that.
Yeah,
then.
there is a big reason to file married filing separate. And typically, when you go to your CPA, you don't hear that answer consider, because CPA runs the numbers, and based on numbers analysis, 90% of the time, married, file, and joint is the most preferential and
Right.
beneficial
That's what I've always
status.
thought. Yeah.
But there is a legal reason why not to file
Do tell.
married, filing jointly, and that's why you come to a tax attorney. And that reason is you basically once you file married, filing jointly, you accept joint and several liability for your taxes, which means that if your husband, let's make up an example, husband is responsible for whatever back taxes, or he has some businesses that he hasn't disclosed, or he's disclosing or whatnot, and there is a big tax bill, you are signing off on the tax return by married, filing jointly, that you're responsible jointly and severally for that tax as well, even though, let's say, you don't have any income.
Yeah.
So you're taking on that huge responsibility.
Yeah.
So there is a reason to file married filing separately, even
that
though
makes
the
perfect
numbers.
sense.
Yeah.
Because joint is meaning you're doing this together, so the liabilities are also together.
Exactly.
And if the spouse has some tax error implication, they're audited.
Yep.
Then now you both together own that debt.
Exactly. And then during divorce, when divorce attorney, it discovers that they're supposed to send the client to tax attorney to look at the tax situation, because that bill could be huge.
Yeah. Now we're getting a little off topic, but briefly, in that scenario, when you're going through a divorce and you realize, I've been filing jointly this whole time, and now I have a tax problem because of my spouse who I'm getting ready to divorce. Is there any legal way that you can help in those situations?
Yeah, there are a couple of programs like injured spouse and all that. I mean, there are separate IRS related things. Well, like, for example, one of them is like, okay, I didn't realize that there are, let's say, hidden income from the husband, I didn't know, and such. I mean, there are a criteria to go through and qualify for those exceptions, if you will. But there are opportunities there in case that's what to happen to a spouse.
Okay. So that's good to know if you find yourself in that situation where you've filed jointly because you've always believed that to be the most beneficial route. You get the most deductions or things of that nature. And then the marriage does not last, and now you're on the hook for liabilities. That's when you call Alena.
Exactly. Perfect.
So you obviously touched on the filing status and why that's important to check that before the year ends. But also, let's talk about a phrase you mentioned earlier, AGI, so adjusted gross income, correct?
Correct.
What is that, and can you explain that kind of in plain language so that everybody understands why that number is important?
Yeah, so like I think of AGI, and once again, we're talking about individual taxes, like personal taxes, because AGI is individual tax return thing. And basically, it's a gross, you think of it as gross income that you earn. It could be wages, it could be income from your businesses, it could be passive income from your interest, dividends, such and such, retirement distributions. Everything comes to this gross bucket and gets reported there. And then you work down from there. You take out your deductions to arrive to taxable income. So that's how the formula works.
Got it. So is there any reason why that number is so important and kind of impacts everything, or?
Yeah, so that's a gross number. So you get basically like figure out, and I gotta bring up a good little tip. But some people do forget, for example, like if I have somebody that comes to me with back tax filings, right? They do forget that they took, I don't know, let's make it up, IRA distribution back in 2021. And let's say, right, and they don't report it, and IRS has a transcript, IRS has a record of that IRA distribution. And that return can, they're going to basically receive penalty notice and such and such. So I always check the transcript before I file somebody's tax return for the back year, just to make sure that we don't miss something silly like that just because they forgot.
Smart. Yeah. So those are little things, like you said, throughout the year that people don't always remember that they took a draw from their IRA or something like that, and that they have to pay taxes on that.
Exactly. Or crypto transactions, right? Like if you sell crypto, IRS, if you received, let's say stock, not crypto, let's say stock.
We'll
if you
use
received
stocks, okay.
1099, right, from sale of whatever little stock, they have a transcript of it.
Yes.
If that
yes.
1099 was filed, and if you don't report it on your tax return, it's a mismatch, because what they're doing is they're matching the 1099 that they have a record of and your tax return, and there is a mismatch. It's not reported.
Right. I think that's really important too for young people, because a lot of people have the app like Robinhood, and they're trading and they're buying stocks nowadays, and may not be fully educated on the tax implications when you're selling and you're getting money off the profits from the stocks that you're selling, that you get a tax form at the end of the year.
Yep.
And you're supposed to be reporting that income, because that is income,
Yep, and you get to deduct your basis. So let's say you bought your stock for $100, you get to deduct that $100. But that comes, I think we talked about this point a little at our last meeting, that, okay, let's say you do want to deduct that $100, but you never filed your tax return, and IRS forces that tax return for you. They're not going to deduct that $100 for you. That's your loss.
Yes,
so you do want to file your back tax return.
Absolutely. So then, talking about businesses, because we spoke about AGI and individuals, but so like for someone who owns a business or they have an S corp, how does paying yourself a reasonable salary help manage with the AGI and taxes and all that?
So first, let's break it down a little bit, because yes, S corp, that is a service. So I am a tax attorney. My entity is for taxes an S corp. So I am providing a service, right? So I need to take that reasonable compensation. It's not whether I want to or whether I don't want to. You're supposed to take reasonable compensation, because my business is service, right? I'm providing service. So what is that reasonable compensation? That's for you to figure out what that reasonable person in your similar position is going to get paid. And so if that number is too low, IRS can come in and say, hey, your number is too low. We are going to assess additional payroll tax and interest and penalties.
So you can't just try to pay yourself a little bit.
Yeah. So, for example, and they're also going to look at distribution. So, for example, if, let's make up an example. Let's say that your S corp makes $50,000 a year, and let's say you pay yourself something like $5,000, but you're spending all this time working for your S corp, and you're taking the rest $45K in distributions. Wow, that's a little red flag, because you're taking money out. You need that money to live off and all that. Yeah. But you're spending your service. You're spending all that time in your business, and you're only paying yourself $5,000. Yeah, that's a little low.
A red flag. Yeah.
That's a little low. So you just have to be careful with reasonable compensation. Then, yeah.
So then, based on what you're saying, it sounds like depending on what your adjusted gross income is, can have a very big impact on your taxes and your penalties or things that you have to end up owing. So is there any way that someone can strategically adjust that AGI around this time of year so that it benefits them?
Yeah, definitely. So one of the, what I would look into is the Big and Beautiful. Trump signed Big and Beautiful back in July 2025. And there are a few small business friendly provisions there that you can think about. And let's talk about bonus depreciation, because I think that's one of the bigger ones for small business. What is bonus depreciation? Bonus depreciation is the immediate write-off that your business can take against your taxable income. What it means is that your taxable income is going to go down, okay? It's not for granted. It's not, you can just take bonus depreciation for anything. It has to be a qualified asset. But let's say you have commercial real estate, right? So land is not depreciable. Commercial building is depreciated over a straight line, 39 years, so not much to play with there. But if you do cost seg study, which is basically a strategy, it's like a report you're going to get the third bucket of assets that you can take bonus depreciation on and write off immediately once you place that property in service, that bucket in the form of bonus depreciation. That could be lighting, that could be qualified improvement property, that could be certain land improvements, and that number could be huge. So you could be technically missing out on immediate write-off if you don't understand what bonus depreciation is, how you can take advantage of it, how you can strategize, and now is a good time to strategize.
Right, because if you start thinking about those things now, it can set you up very well when you're doing your filing.
Exactly.
Because I wouldn't have ever thought about those things being categorized as bonus depreciation.
Yep.
That's very good to know. Very good to know. So we have a good moment now before we shift gears to talk about withholdings and estimated payments and avoiding penalties to take a quick commercial break. And then when we come back, we'll be here with our resident tax expert, Alena Miles. We'll be right back after this commercial break.
This is the Tan Talk Radio Network.
After a car accident, there are many questions that you need answers to. Who pays for my car repairs? Who pays for the medical bills? What about my lost wages? And more. The personal injury law firm of Bryant, Caulfield, Averill, and Noyes has been answering these questions for their clients for nearly 70 years. Since 1955, they've been a voice of the injured in the legal system. As one of the longest established law firms in Tampa Bay, Bryant, Caulfield, Averill, and Noyes is here to answer your questions. Listen to their live call-in radio show on this channel every Tuesday evening from 5 to 6 p.m. or call them at 727-796-8282 or visit them at voiceoftheinjured.com. Offices Clearwater, non-attorney spokesperson.
This is the Tan Talk Radio Network.
And we're back with FLALAW live on the radio. Hopefully you have been tuned in since 5. We are here with your live legal call-in talk show. And tonight we have our special guest, and she is a repeat guest for us, attorney Alena Miles, who has been giving us all the tax details that we need to know for the end of the year in Q4, getting things ready so that we can be going into the new year and preparing for the tax season. And having all the proper information, and also maybe finding extra deductions and things like that before the year ends. So with that being said, let's shift gears a little bit and talk about withholdings, estimated payments, and things like that. So when it comes to this time of year, there's a lot of like seasonal work, freelancing, people are doing things of that nature. So I want to talk about things like Santa's Little Helper. They work at the mall and they get a 1099 or something like that. I don't know. But with federal taxes, usually, it's a pay-as-you-go type thing. So what does that mean for employees and freelancers or independent contractors and things like that?
Great question. So payroll and wage is different from 1099 independent contractor. Mm-hmm. Okay, so those are employees as independent contractors, which is cheaper for the employer because they're shifting basically payroll tax to the recipient. Okay, that employer can be penalized. Okay, because they are misclassifying their employees as independent contractors intentionally. So that's something to watch out for. But from the employee standpoint or independent contractor standpoint, let's say you do have wages, right?
Sure.
There is that form W-4 that your employer asks you to fill out once you get employed. So my recommendation is to review that form at least annually. And the things that you can look at: am I getting a refund? Do I owe money? But let's say in my example, you're just an employee. You don't have anything on the side. You have just income coming from this one job. So you should know, like if you keep your job, if you're there for a year, you should know whether you get a refund or whether you owe money. So you can adjust your withholding through that form W-4 by filling out W-4. And I don't think there is limitation on how many times you need to fill it. You can fill it out. But that's your way to adjust your federal income tax withholding. Now, why would you do that? You would do that because if you're short, you're going to be penalized. You're going to pay underpayment penalty.
Right.
And so you don't want to be short, but yet you don't want to pay too much money to the IRS, because otherwise you're giving them free money. It's sitting there for a year and you're not using your money. So you kind of want to do the calculation.
To wait until the refund to get it back.
Exactly. Yeah. So you don't want to do that as well. You want to be at the break-even point.
Yeah, that makes perfect sense. So then when people are, let's say they're picking up extra seasonal jobs just for the holidays and they're getting these W-4s, should they just do exactly what they do for their main job, or how should they be filling those out and updating them?
Yeah, so they should. There are questions in that form that they can go through. But if I shift gears and say that if you're your own business and let's say you pay yourself that wage, going back to our S-Corp example, what you can do to minimize underpayment penalty is you can pay yourself, let's say, year-end bonus, okay? And you can maximize your withholding, federal income tax withholding, through that final year bonus check. And what it does, it equalizes your withholding through the year. So in other words, even though you did it in December, it's like equalized throughout the year. So most likely than not, if you do the right calculation, you're not going to pay that underpayment penalty.
Perfect.
That's a little tip to consider in December.
So then with individuals who, like you mentioned, just they're a standard employee, they fill out a W-4, they have just the one job, they're not freelancing or independent contractors. If something has changed in the status and they are facing an underpayment issue, is there any way that they can still fix that before the year ends?
They can, but they have so much time now, right? Like if they go tomorrow, let's say they reach out to the employer and say, hey, give me W-4, I'm going to adjust my W-4. So you have, a couple, 1 or 2 paychecks.
You've only got about 2 paychecks left. Yeah.
So unless you do something drastic on your W-4, there is not much time left.
Yeah.
Technically, the better way to go about this would be to revisit it, let's say in January, and spread it over the year, so it's more, so you have a better idea of how your year is gonna go
throughout the year.
But December, just doing something drastic in December, I mean, it's you can, but it's
it may not
giving
have
you
much of an
time.
impact. Yeah. Okay, perfect. So then I know we talked about this before in the last show when you were here about a month ago. We talked about safe harbor rules. So I don't know if that matters now in Q4, but can you explain the safe harbor rules and how that can help prevent penalties?
Yeah, so safe harbor rule, in simple terms, what that means is that if you pay so much of your either prior year tax liability or current year tax liability, so I believe it's 90% of your prior year tax liability or 100% of your current year tax liability, you're not going to be subject to underpayment penalty.
Okay.
That's what it means. Okay. There is the 110% rule, but that's more like higher AGI taxpayers fall into 110. So the IRS wants that cushion, like they want you to pay not 100% of your tax, but 110% of your tax. If you're in that higher AGI bracket. But other than that, if you follow safe harbor, if you pay so much in tax throughout the year, 90%, I believe, of your prior year tax and 100% of your current year tax, you're just not going to be subject to that penalty.
Okay. That's good. Good to know.
Yep.
So then if we shift gears to business owners, because I know this can get tricky when it comes to personal finances and business finances. And as we're going into the end of the year, I could see how sometimes these things can get intertwined and mixed and mingled. So what would be your best advice, and why is it so important to separate the business and the personal finances?
That's an excellent question, and it shouldn't be intertwined.
Yes.
It should be separate.
Right.
And the reason why it should be separate is if you have an LLC, create an LLC for a reason. People who have multiple rental properties put each one of their rental properties in just separate LLC.
Mm-hmm.
And there is a reason for that. And the reason is, in case of a lawsuit, in case creditors come after you, they do not get through the corporate veil, right?
Mm-hmm.
So if everything is commingled, if everything is intertwined,
all mixed together, they're going to get right to you.
They will get through to the owner,
Yes.
correct.
Mm-hmm.
But if everything is separate, bookkeeping, bank accounts, you have meetings, board meetings, you treat your LLC as a business, not as yourself, extension of yourself, that's when most likely than not, they might not be able to break through to the person. They will try to, but
Sure.
but if that's the biggest reason why you want to keep it separate.
God, good news, good information, because I've noticed that with landlords, a lot of times that property is owned under an LLC.
Yep.
So that makes a lot of sense as to why they're doing it that way. But that also means that the collection of the rent payments and all that cannot be going into their personal bank account. It needs to be separated out with that LLC that they created for that property.
Exactly, and they need to reconcile their bank accounts so they have year-end bookkeeping before they file their tax return. Because even though your LLC is disregarded, let's say your LLC has one owner, Jacqlyn, right?
Yeah.
So from legal standpoint, it's an LLC. You have legal protection if you follow this administrative things we just discussed to protect yourself. But from tax side of things, you could be disregarded if you just one single owner of your LLC. So the form you're going to file for your rental is Schedule E. It's the same form as if you file if you have that LLC or if you don't have that LLC, because you are for tax disregarded.
Yeah.
But legal is different. The legal side, you do want to have that LLC basically to protect yourself from legal standpoint.
For liabilities, yep. For when personal injury attorneys like us come knocking because someone has gotten hurt on the property, right? So then when it comes to finding missed business deductions, I'm sure businesses are always looking for these things. We know mileage, home office expenses, software. Some things may qualify, some things may not, right?
Right.
So what are some of the commonly missed business deductions that you see?
So let me touch base on mileage. What I would suggest is if you have a personal car, and let's say I drive my car to Miami for continuing education purposes, right? It's my personal car. Can I take deduction for that standard mileage that I drive to Miami for the business purpose? I have by appointment office in Miami. And
I would think so, right?
You would think so, exactly. So what I need to do is I need to keep a log of my trips to Miami, in my example. I can write off that mileage if I take standard mileage versus actual. Okay. But what I need to do is I need to reimburse myself, because my car is a personal car, right? But I'm taking a business trip. I'm going to reimburse myself to have the record, not only the log in case I get audited, but also the record of me. It's a formal, I'm treating my business as a business, not commingled me and business, me as individual.
Right.
So I'm going to have a check written to me
I
for that
see.
mileage
Yeah.
to establish that I'm treating it as a separate business expense.
Gotcha.
So in terms of mileage, that is a little tip. In terms of home office, yes, typically if you file Schedule C, there is a line for home office. You can go simplified way, or you can list out your mortgage interest, utilities, whatever else, which is recommended because your deduction is going to get bigger.
Yeah.
If you want to go that route and maximize your home office deduction. A lot of people work from home. And so if you do qualify for that home office deduction, why not optimize it?
Absolutely. Are there things that you find that people assume are deductions that aren't? Or is there anything that comes to mind for that?
Yeah, so there are separate rules on meals and entertainment. Entertainment is not deductible. Rules have changed throughout the years.
So if I take you out to a lavish dinner at Ocean Prime or Eddie V's,
Yep.
can I not write that off for my business?
There is a limitation for that.
I see,
But if you
okay.
take me to, I don't know, to some kind of entertainment facility, that's definitely not deductible. We
I
cannot
see.
deduct.
Mahaffey Theater, go to a concert. I can't do that.
Or like fancy, let's say fancy lightning game or something
I
like
gotcha.
that.
And we get the sweets
You just
and
have
all
to
that.
be careful with that.
I
yeah.
see. Okay. That makes very good sense.
And business deduction, the basics of business deduction is, and I'm sure you learned that in your tax course.
The one that I did not
The
do
one
well
that
on.
But it has to be ordinary and necessary.
Mm-hmm.
Ordinary, do you go to lightning games ordinarily
Right.
to take that business deduction?
Okay,
And
okay.
necessary, was it necessary for
I
you to
see.
go there? So it's code section 162.
Sure.
So ordinary and necessary, both. It's and test, not or test. It's
Right.
and, both ordinary and necessary.
Right. So there's very, very few businesses that might qualify for something like that. You would literally have to work, I would think, in the arena or the hockey industry for that to be considered ordinary or necessary. So that's good. I'm glad you explained that. So some people recommend setting aside money for tax payments. Is that something that you recommend for people who are self-employed or people that might underestimate what they owe? Is that something that you suggest? And if so, how much?
So my hesitation there, that would be good self-management, right? So it's like, okay, if you cannot manage your money well and you are trying to implement this kind of strategy to make sure you make your estimated tax payments, which you're supposed to do, yes, sure. But I would caution you not to overpay, not to send too much money to the IRS, and then you would just be owed a big refund, okay? Why would you want to go that route? Why would you want to give them too much money, right?
Right.
And have it sit there for as long as it sits there. So just be careful with that.
Okay.
There are reasons why you would want to do it that way, and maybe you are going to apply it towards next year estimated tax payment. For instance, next year you expect that you're going to owe a lot of money to the IRS. So whatever you have
see.
access this year, you're going to apply it to next year. Yeah, that could be a reason why. But just be careful with that.
So is there anything as far as purchase-wise or prepayments-wise that people can do now in this last month of the year that could have a reduction or reduce the year's tax bill for next?
Yeah, some
the next
people,
one.
it's an interesting question, Jacqlyn, but some people ask me, should I buy a vehicle? Should I buy a business vehicle because I can take bonus depreciation? I can take that deduction right now. My answer is buy that vehicle for business reasons,
Right.
okay? Don't buy the vehicle because you heard of bonus
The bonus
depreciation and you
depreciation,
think you
yeah.
can write it off. Buy it because your business needs a vehicle. It's a big investment. So make business decisions, but also think through the tax or come to the professional like myself to think through the tax strategies. But yeah, why not? If you place something in service in December 2025, you can take that immediate write-off if that asset qualifies for that immediate write-off. Not every asset qualifies, but if that
Right.
qualifies, then yeah, sure.
Okay, so there are certain things that you can do now that you should obviously make good decisions about because you don't want to just buy vehicles and things like that. But that could potentially help reduce your tax bill.
Yeah, and look into, like I said, look into Big and Beautiful. There are a couple of provisions there that you should you should know about.
Right.
How about Trump accounts? Okay, that's something new. That's something that is new.
I don't think I've heard of it. You said Trump account?
Trump accounts.
What is
yeah.
that?
So basically, that's like a savings plan for the babies that are born, I believe.
Oh, that's
between
right. Yes.
2025 through 2028.
Gotcha.
Okay, so it's not like an IRA. It's a little different. You
Right,
don't get
right,
to
right.
take tax deduction, but my understanding is that earnings, like whatever that account earns throughout the years, that would be tax-free.
Gotcha.
So that's
Gotcha.
the perk of it,
Yep.
the meat and potatoes of that
So
one.
you've got to know what's in there so that you can obviously take
Exactly.
advantage of the different, avenues that are available to you. So that actually segues into my next point, which I think is important for people to realize, because I don't think a lot of people necessarily take advantage of how they set up or contribute to their retirement plan. I don't know if it's too late now, but I guess you still have until the end of the year. What can people do in terms of properly managing or setting up or even contributing now to a retirement plan to help with their taxes?
So one of the strategies could be, and once again, it's case by case, but generally speaking, one of them could be maximizing retirement plans available to you. So for example, if you have SEP plan and you can maximize SEP plan, but you're not maximizing it, understand that it's also tied to your wages. So like if you take 0 wages and want to maximize your SEP plan, it's probably not going to work. So know the rules, see what your retirement options are, plan options are, and maximize your retirement plan savings if that's what you're trying to achieve. So you still have a month to talk it through and do something.
Now, I've always heard about, maxing out your IRA contributions and things like that, and making sure you take advantage of putting as much in there as you can based on whatever the limit is for the year. How does that work, and why is that important?
So there are various pension plans and programs and stuff like that, like traditional IRA, Roth IRA. They'll have their own different rules. One, you do get to take tax deduction. Another one, you do not.
Okay.
So depending on what you have, you're just saving for the retirement.
Right.
You're restricted because if you take your money out too early, before 59 and a half, you're subject to 10% penalty unless you meet a limited exception like death, illness, those kind of things where you say, okay, I had to take money out and I want to take it out tax-free, not tax-free, I'm sorry, not subject to that 10% additional penalty. But those exceptions are limited. So you are locking your money into those retirement plans. So you have to understand that if you take it out too early, if something happens, you're going to pay tax and you're going to pay penalties. So.
Okay. And so if you know offhand, which ones can you think of that allow for the deductions? You said
I believe
something.
traditional one
Traditional.
is in that regard, but Roth for the future is better, and a lot of people convert to Roth. So
Roth,
that's another
yeah.
strategy to consider, convert traditional to Roth. Because even though you pay tax now, in the future it's going to be tax-free. So even though not
Makes
tax
sense.
deductible.
Okay. Now, I know you mentioned that folks should really be coming to you in October, and we're already in December, but planning ahead for next year when folks are trying to do this, why is it really important in this October to December to really get your tax planning done?
Because books are still not closed for 2025. We're picking on 2025. There comes January 1st, 2026, your books are closed, okay?
Right.
What can you do? Not much for 2025 purposes, right?
Right.
But right now, you still have that window of opportunity to be proactive and do something. Like I gave you bonus equalizing your federal income tax through the bonus check. That could be a really good tip for some folks.
Exactly right. Well, this has been a great show. We always have so many more questions left on the sheet that we don't get to, but that's okay. We got some good information out, and I want people to know how to get in contact with you, to be able to reach you. If they do have those last minute things they need before the books are closed, how should they reach you, Alena?
So the best way is through phone, 727-977-8270. I do have a website, www.taxattorneylegal, 3 words in one, taxattorneylegal.com.
Perfect. Thank you so much for joining us. I hope everyone got some very good tax law information for tonight. As you know, we will be back every Tuesday at 5 p.m. with various guests. I believe in about 2 weeks, we have our criminal defense lawyer coming back to talk to us about some of the changes in the law for this year. So we will see you back next Tuesday at 5 o'clock. This has been FLA Law live on the radio. Good night.